This is Austin Real Estate Investing.
Austin Real Estate Investing.
We'll be discussing real estate investing in Austin, Texas, and bringing you experts from all different sectors of the real estate game. Your host, Jordan Moorhead, is a real estate agent and investor in Austin and is here to help you get started or to build your portfolio and explore new strategies.
Hi, this is Jordan Moorhead, and this is Austin Real Estate Investing. Today we've got Gabe Radovsky here, and he's going to tell us all about his experience investing in Austin, Texas, and how you can do exactly what he's doing too. Hey, Gabe, how are you?
Hey, Jordan, I'm doing well, man. How about yourself?
Doing great. Great to have you on here. I know we've been waiting to get this scheduled here for a while, and I can't wait to hear all about what you're doing here in Austin.
Right on, man. I imagine I may have less insights to share on Austin real estate specifically than some of your guests, but maybe we'll branch out and touch on other topics as well.
Yeah, we like to talk about Austin real estate, but then I think just general real estate investing applies almost everywhere. Yeah, the Austin market is different, and you need to tailor your approach to the Austin market, but it's important to have the general real estate investing principles down, no matter where you're investing. And that's what we like to talk about on this show. So, Gabe, real quick, who are you and how are you involved with real estate investing?
So I've been a software engineer for about the last 7 years. Was just talking to Jordan before we started recording, telling him I'm leaving that W-2 job no later than January, and I'm actively looking to buy a small business in this area right now. So that's the main thing I have going on. I found myself for a couple of years up until about late 2019. I actually don't know how the idea of real estate investing got into my head, but I found myself saying things like, one day I'm going to, buy some multifamilies. I'm going to invest in real estate. It's just kind of an idea that got in my head. And then one day, I think it was around December of 2019. I couldn't even tell you what happened or what changed. But one day that went from, I'm going to buy real estate someday to, I need to buy real estate right now. This is an emergency. And so I started reading everything I could, reading books, listening to every episode of Bigger Pockets podcast, pretty much just learning as much as I possibly could, interviewing realtors, just getting involved as much as I could. And so by about 3 months later, I was ready. At the time I was living in Los Angeles. And so this was March of 2020, right around the time COVID hit. I was about this close to pulling the trigger on a 3-unit property in Los Angeles in Eagle Rock that I was going to house hack. And that ended up getting pretty squirrely once COVID hit. What had looked like a pretty good deal started to look like less of a good deal. Contractors weren't returning phone calls. The property manager who I'd been working with was suddenly telling me he thought I should be really careful. And then that property ended up selling. I tried to negotiate the price way down. They budged a little bit, but not much. That property ended up selling a few months later for 10% less than I almost paid for it.
Oh, wow.
Yeah. So I think I dodged a bullet there.
In LA, did they not have a horrible time during COVID with tenants paying rent? I think I heard a lot of horror stories there. Do you know?
Yeah, I haven't followed too closely because I didn't end up buying in LA, and in retrospect, I'm glad I don't own any real estate in California. But I would imagine between rent control and eviction moratoria and all of that, I would imagine collections have been difficult.
Yeah, I would be nervous to own real estate in LA specifically, but especially in California, anywhere. Very tenant heavy, not so much on the side of the landlord.
Right.
Just a little nervous. Of course, everybody's going to treat their tenants correctly, but you don't want to be able to have somebody sitting in your property and you can never raise the rent, nor can you get them out when they're not paying rent, which a lot of people are dealing with that right now. Thankfully, here in Texas, we are getting out of that, but I don't know when each individual state will get out of that. So
I have a feeling if I had bought that property in LA with a long enough time horizon, if I could have just, rode out the difficulty this past year, I think on a long time horizon, 10, 15 years, I would have worked out well anyway. But sure. I ended up buying some real estate in Florida and Texas instead, which I feel great about.
That's awesome. Yeah, I think definitely landlord friendly states compared to a friendly state there.
Right.
So I guess moving on then, why Austin? Why did you choose to move to and then invest in Austin?
So I just moved to Austin with my fiance and our cat beginning of this year. I guess we moved very end of February, beginning of March. And, she and I had been talking for a while about like, where do we want to live long-term? We've lived a few different places together. Mm-hmm. We weren't sort of both in love with any of them. We lived in Denver together, in San Francisco, in Jacksonville, Florida, which is another place that I've bought some real estate. And we liked things about all those places, but we weren't in love with any of them. And, for any of those places, we couldn't really agree, like, this is where we would want to settle for 30 years. This is where we'd want to plant roots. And so we got to having that discussion, like, well, where would we want to plant roots? And Austin kept coming up, both in our friend circles, in terms of like people we follow in various fields. I started to feel like every single week I was hearing about more people I know who are just like intelligent, influential, dynamic kind of people moving here. Like, just for example, like a lot of the podcasters I follow who are, who I think are like really interesting kind of thought leaders and conversation leaders, like Lex Friedman's one example, Joe Rogan's an example that a lot of people know of. I just felt like a lot of people who were having interesting conversations, doing interesting things, were moving here. Obviously, all the tech played into that too. Yeah. It just seemed like the place. And I had been here before a couple of times. I had spent probably a grand total of a couple of weeks in Austin over the years, and I really liked it. And it just seemed like it was having a moment. And I came here and visited in December and was looking at some real estate, thinking like, maybe it's a good time to buy a house. So I was working with the realtor I was working with was our mutual friend, Diego Corzo. And, I was talking to him about the real estate market here and looking at some houses and seeing how hot the sort of offer situation was and what a seller's market it was and how it was going up. And I decided to not buy just one, but two houses here. So I bought a personal home and I put earnest money down on a new build, new construction that I don't know exactly what the exit plan is yet. I'll probably hold it for at least a year, maybe longer, and then probably sell it for, for some pretty good appreciation. I think that's already appreciated about, if I'm not mistaken, something like 10 or 15%.
Oh, wow.
And I haven't even bought it yet. I haven't even, I have the price locked in, but I haven't even put a down payment on it yet because it's not finished being built. Mm-hmm. And similarly, this house that I'm sitting in now that I closed on in January has been going up like 1% a week. I think I closed on this house for $472 in January. The current Zestimate is like $560. I think but I'm pretty sure I can sell it for over $600, maybe $700 even. I'm not even sure.
Yeah. That's a really interesting thing about Austin right now. And you mentioned all the podcast people moving here, and, supposedly we have Elon Musk roaming around here somewhere. Tim Ferriss has been here for a few years. He
That's
said,
right.
I can't do San Francisco anymore, and took off a while ago. But, we haven't had anybody on this podcast that's talked about this, but I've talked to so many people in person or online that say, hey, I bought a new build, or I put a new build under contract here. By the time I closed on it, it was absolutely 10, 15, 20% higher up here. And I think, the building timeline, it takes 12 months to build a house, 6 to 12 months to build a house. And last year, just the greater Austin area appreciated 28%.
Wow.
Put a house under contract in the beginning of the year, and then it closed a year later, your house is worth so much more. So I want to talk about that real quick. Obviously, the one you're in that you live in, you bought that was previously built, correct?
Correct.
And forgive me, you're down south?
Yeah, down by South Park Meadows.
Okay. Yeah. So great area. Close to everything, obviously appreciating really quickly. Where is the new build that you have under contract?
It's only about 5 miles from here. It's just on the east side of. I'm west of 35. This other house is east of 35. Mm-hmm. So I think it's like Onion Creek. You call that? It's like just outside of city limits. The development is called Cloverleaf by Braun Homes. I can't really take credit for that one. Like, I mean, basically Diego told me about it. I believe he told me that both he and David Osborne were buying investment homes there and that it was an investor friendly community. And I was just like, okay, if people smarter than me are doing it, like, why not? I'm just going to make a bet on Austin real estate. Let's do this.
Awesome. So that one is just purely appreciation, correct? Are you counting on any sort of cash flow there, or are you just buying it for the appreciation?
I'm buying it for the appreciation. I expect it to break even or potentially even lose a few $100 a month while I hold it, or at least until or unless rents go up significantly. But if I hold it for a year and sell it for $100K or $200K more than I paid for it, then no big deal.
Yeah, that's a great play. So yeah, I'm just curious, because we haven't had anybody on here that's talked about single family investing for appreciation. I know I've talked to so many people that are doing it in the Austin area, and people that have made out quite well. There's people.
It's obviously risky. There's a reason why most investors say they'll only accept positive cash flow.
Yeah.
And I don't blame them. I'm not gonna. I actually honestly can't claim that this was like a super well reasoned decision. It was almost more of like, so like the first little multifamily that I bought, that I house hacked in Jacksonville. Like I analyzed the hell out of every deal that I was looking at and like made sure I would only buy something that totally made sense. And then this one honestly was more like, my gut says this is a good idea. Like it doesn't really pan out in terms of cash flow. I don't think it's going to cash flow. It'll break even if things go well. But I just feel like Austin's blowing up and I want to like put some chips on black. It's kind of more like it, to be honest with you.
Yeah, absolutely. Love that. I think you have to, and like you said, a lot of investors will tell you, don't bet on appreciation, but I think there's a lot of other factors to pay attention to with the Austin market. People say, I only buy for cash flow. And I get that. I buy a lot for cash flow. But if you're buying in the Austin market and you can make it break even, or like you said, just lose a little bit, and you're in an area where 180 plus people a day are moving and all these big companies keep moving in, and it's just one after the other, you have to take some educated bets there. And I think they can still be bets, but like you said, you're probably not going to lose money on it. There's not any horrible downside there. Maybe you don't make as much as you'd hope, but maybe you just make a little bit. If you buy something and a year or two later, the area's grown by 180 people a day per day, it's hard to imagine that prices have gone anywhere but up. It sounds like you just said, hey, here's some people that have been doing this for a while in this area. They're doing it really well. I think I'm just going to go along for the ride here. And
I think that is sometimes a great cheap heuristic, is if you see someone who's really successful in a certain area and you can easily mimic something they're doing, it might be worth a shot.
Yeah, some R&D, rip off and duplicate.
Right.
Yeah. So, you said this house is not built yet. When will you be closing on this property?
So we just had some back and forth the other day about when the closing date's going to be. So I think it should be between 2 and 3 months from now should be the closing.
Oh, cool. Are you having any delays from supply chain issues or labor issues or any of that kind of stuff?
I mean, there have been delays because of the weather, because of all the rain. They haven't told me about any delays specifically related to supply chain, but this is, so it's Braun Homes. I don't know where they fit in terms of size of all these builders, but it's a pretty big multi-state organization, I believe. So I would imagine they have the economies of scale to be able to deal with some of those kinds of problems, or at least be able to like shield the end customers from them. But I haven't specifically heard about any of that.
Yeah. The only negative thing that's happened to a client of mine on a new build is they ran out of brick. So they said, oh, so sorry, we'll have to give you stone. It's more expensive. We'll pay the difference. Here you go. So
that's not bad.
Stone house rather than brick, which they were totally fine with.
Yeah. It's a nice free upgrade.
Yeah. Yeah, I haven't had anything negative happening. I think all these builders are going to go out of their way to make sure things happen on the best schedule they can and the way they said they were going to. So yeah, I'm sure you will absolutely close on time, maybe a little late, but nothing crazy. So, Gabe, you said you've been in tech for a long time and you'd always thought about real estate investing. What specifically about real estate investing was attractive to you?
Have you wanted to be part of GoBundance, the tribe of millionaires, but just haven't hit that millionaire status yet? Well, now you can, not even being a millionaire, by joining our new program, GoBundance Emerge. My name's Jamie Gruber, creator of GoBundance Emerge and member of the GoBundance community. And now you can join. GoBundance.com/emerge. GoBundance.com/emerge. Use code Jordan for $100 off this 12-week goal-setting program and mastermind that'll propel you to being a whole life millionaire.
I think after a couple of years in tech, and by the time I started getting interested or thinking about real estate investing, this is when I was working at Airbnb in San Francisco. So I was kind of in the belly of the beast of Silicon Valley. I really got an up close look at the tech industry and the epicenter of it in Silicon Valley. And I just started to realize that it was not really as good of a way to get wealthy as I previously thought, unless you were either going to get into some kind of executive role or start your own tech startup, which is obviously very risky because most of them fail. You can get a mid-level engineering job, let's say, at a Silicon Valley company and be making $300K a year on paper. Although, maybe some of that is stock units, which aren't public yet, so they can't be sold. It's part of your hypothetical compensation, but it's not liquid. And then obviously you're paying California taxes, which are very high. You're paying Bay Area rents, which are insanely high. So I was starting to realize, like, hey, I'm working like 50 hours a week, and they're giving me a ton of perks, like all these free meals and like cool trips and like just like awesome, fun office culture, like more perks than you know what to do is. But I'm working more hours than I'm spending, waking hours at home. I'm making what sounds like a lot of money, but I'm not keeping most of it.
Sure.
Most of it is going to taxes and going to maintain my lifestyle of living in one of the most expensive cities in the world. And I just realized, like, there has to be a better way. I have this external totem of success now that I've been wanting, that I've been going for all this time, but it's really just like, it's just a lot of continual work, which is really making someone else more successful than it's making me. That's what occurred to me about working in other people's businesses, in any capacity, was someone else's. I'm working 40, 50, 60 hours a week, depending on the week. Someone else, and I'm getting paid well, better than most people, but someone else is capturing the majority of my productivity, of the fruits of my labor. Yeah. And so it just got me thinking about ways that I could be keeping all the money I was making instead of just spending it on lifestyle, basically, or trying to always make more by working harder.
I love what you just said there. So you said ways you could keep more of the money you made. I love house hacking just for that reason. I love living in a property that I purchased with low money down and living for really cheap. So I live in a duplex here in East Austin, roughly $700 a month right now. That's
not bad
for me. I know you've done some hacks to save money. Can you talk about just your hacks of how you can save money? Obviously, you've house hacked. Anything else you've done?
I lived in my van for like a year. I don't know. Actually know. I think honestly, I would have had to have lived in it for longer to really save money on that, because I bought the van new and I paid a company that does it professionally to convert it really nicely for me. So I think if I had lived in it for a couple, maybe more like 3 years altogether, it would have ended up, paying for itself. I actually think it's still in the long run going to, because now I'm renting out the van. And so it's starting to bring me income. I kind of cut that adventure short because of COVID. Showering at the gym was, and living in a van in the streets of LA was great pre-COVID. And then in March of last year, it started to suck really fast. So I stopped doing it.
What outlet do you use to rent out the van? So I've looked at Turo and things like that for cars.
Yeah. So for cars, there's Turo or some others. For vans or RVs, there's Outdoorsy, RV Share. I currently have, so actually I found a guy who owns an RV repair and consignment and rental business nearby. And so he's managing it for me.
Oh.
So at this point, it's not as much income as if I was managing it myself, but he's much better situated to store them, to repair them, to manage the rentals. And this makes it essentially completely passive income for me. So I'm happy to accept a lower return.
That's awesome. So he takes care of the repairs and maintenance on it too?
Mm-hmm. Yeah. I mean, obviously like anything that's not going to be covered by warranty or anything like that, I'll have to pay out of pocket. But, like a lot, like he's a guy who knows about RVs, who knows about engines, who knows about fixing problems with vehicles. That's not my skill set. So it would just be so much more of an uphill battle for me to either be always having to find the person who's going to be doing the repairs or be learning how to do them myself. It's just much easier for him to be able to incorporate this into his existing business.
Awesome. Yeah, no, I know a few people who bought RVs or vans or whatever over the last year, and now they're starting to rent them out. I think everybody's biggest question that I always hear is what happens if it gets wrecked or damaged? And
I mean, you have insurance for that. And so actually some of these companies, I know, especially Outdoorsy, has a pretty good insurance policy that comes with every rental.
Okay, cool. Awesome. So another way to supercharge your house hack. So if you're working from home right now and you're house hacking, rental cars are an insane premium. Maybe rent out your car. If you've got a van or a camper or an RV, absolutely spot you can rent that out too. So
I actually really love the model of having assets that are partially yours to use personally and partially rentals. Yep. So, like the van's getting rented out, but if I need it, so for example, I used it a couple of nights a few weeks ago. I, just drove over, picked it up and used it for my trip, brought it back. I actually did buy a bigger Class C RV that I've got them managing too. And as far as that goes, I'm on the list for a Cybertruck. So that's my plan for that, is to use it myself, just for fun, just like on occasion, and then spend most of the time renting it out.
Yeah, that's awesome. I think a lot of people have vehicles or if they're not using, or RVs, campers. There's not that much risk in just renting them out. Rent them out makes money off of them. They may become an asset rather than a liability. And I think that's huge when you're trying to reduce your expenses. All right, Gabe, we talked about this a little bit before the show started. Could you tell our listeners just a piece of advice you've learned on how to avoid a bad deal or something that's gone wrong with your real estate investing journey that you would go back and change if you did it again?
I mean, an obvious one that every single real estate investor will tell you is you make your money when you buy. So don't pay too much, and like, don't fall in love with something. These are cliches for a reason. Don't fall in love with something that doesn't love you back. Don't overpay for a piece of real estate or a business or some inanimate thing that doesn't love you back. I feel like probably one of the best decisions I've made in my real estate investing career so far was to not pull the trigger on that first deal that I had under contract, even though I was like itching to get a deal done, but it was just starting to feel squirrely. And, my intuitions were kind of going in both directions. I talked to some more experienced people and they mostly told me don't do it. So I didn't do it. So that's, big one is like, if you're brand new, your mind might be trying to just talk you out of doing any deal out of fear.
Yeah.
But if a deal is questionable, if experienced investors are telling you that it's questionable at best, probably don't do it. There's always more deals.
Yeah.
And then on top of that, one thing you and I were talking about before we started recording is contractors. I think that's been the biggest struggle for me so far in real estate investing. And I've talked to other investors who've had similar feelings that managing contractors has been one of their biggest pain points. So I think I probably at this point have more advice about what not to do there. But so let's see. I mean, some things that I would advise people if they're just getting started is make sure you interview a lot of contractors, get like as many bids as you can. Make sure you have your incentives aligned with the contractor. So, like make sure that they are not getting paid in full until the job is completely done. Make sure that like the draw schedule is completely explicit and all the work is being done is completely explicit and everything is written out, and that nothing is sort of like a handshake deal or just like agreed upon verbally. None of that's going to fly. It all has to be written out and totally explicit about exactly what's getting done. I think probably one of the biggest mistakes I made with contractors is not firing them early enough. Like I'm thinking of one guy in particular who like I accepted a couple of his excuses or sob stories about why like he blew me off for a few days or why things weren't getting done when he said they were going to get done. And like in reality, I let that go on for a few weeks. I should have just fired him. Yeah. As soon as he started to become unreliable, I should have fired him then and there and just like moved on, cut my losses. And then one mistake I made with another contractor after that was taking his word for it that he would be able to start work on a specific date, which was like a month in the future at that point, or maybe a little more. And so it's sort of just like pausing and eating the carrying costs for that time. And then he was a ghost when the actual date came around. So actually, I actually don't know. I'm not sure I know what the solution to a problem like that is. I think part of it is some of those guys have so much work these days that they're probably not going to be interested in a job unless it's a big one, or they know that you have another one lined up for them. They know you have consistent work for them. Yeah. So maybe I would have focused more also on only trying to work with contractors who I could get personal referrals for, as opposed, I've found some of them I've found some through personal referrals, but also through like Facebook groups or things like that. And maybe I would lean more on personal referrals. I think people do care about their reputations. And so if you get someone who's your realtor friend tells you a contractor who's done good work for them, they don't want you going back to your realtor friend who's referred them to 100 people and telling them like, hey, that guy, wasn't really up to the job. So that would probably be a better way to source them than some slightly more anonymous way.
Yeah, no, I love that. I mean, I think finding it through a realtor is a great way to find it. Because like you said, generally these contractors want to keep the realtors happy. But you already alluded to earlier there, right now, a lot of them are so busy, they just don't really care unless they think they can get top dollar for it, or that you're going to feed them a lot of work. So you really need to be particular with who you're using right now, especially. And I like one thing you said there earlier. Don't let fear of doing a deal just talk you out of deals, but talk to more experienced investors and talk through the deal. A lot of times, people who are not investors are going to tell you, no, don't do it. That's risky. That's bad. But you can talk to some other investors, say, hey, I've done stuff like that. Here's how it went for me. And I think it's easy to let your just personal fear say that, hey, no, don't do this deal. It's a bad deal. And do that over and over and over and over, and then just never get a deal because you're always waiting for that right deal. But yeah, lean on other investors that know their stuff, and you're in a much better spot. Obviously, you're in a group, GoBundance, where there's just a plethora of real estate investors and also
right.
You can reach out to and ask. And groups like that are awesome. Where you can just say, hey, I'm thinking about this. Who else has done something like this? What do I do? And you'll get 10 great answers in a place like that. But I think it's really smart to say, hey, lean on other people when you're a little nervous and can't figure out a deal.
Yeah, I mean, what you're talking about is exactly why if you're in any new endeavor, you should try to find a mentor, or at least, a person or a small group of people who are more experienced than you. Try to get around and spend some time talking to people who are more experienced than you in that particular thing. Because if you're brand new at something, your intuitions about it are probably wrong.
Yeah.
You know, whether that's investing in real estate or a new sport. Like, so I heard I think it was the latest edition of the Bigger Pockets podcast. They interviewed David Green interviewed one of the Gracies, you know, like one of the founding family of jiu-jitsu, and they're talking a lot about parallels between real estate investment and jiu-jitsu, and which I thought was really cool because I'm a fan of both. Mm-hmm. So I mean, if you're new to an endeavor, you're probably going to have a lot of fear. You know, if you're like most people, you're going to have a lot of fear and find 100 excuses or ways to talk yourself out of it. Mm-hmm. Or maybe there's a smaller group of people who are the opposite, who are going to be so gung-ho, they're going to be reckless and they're going to ignore warning signs. And either way, that, you know, the chances of your intuitions being correct about something, let's say some difficult, risky endeavor, whether it's real estate investing, mountain climbing, jiu-jitsu, going into business for yourself, these are all things that involve risk, that involve great reward and great risk. Mm-hmm. And if you've never done it, your intuitions are probably wrong. So talk to people who've done it a lot and ask their advice.
So is that the advice you'd give to newer investors that are looking to get started? So, you know, what helped you get over that hump when you were buying your first property? Just knowledge, or was it seeing other people that had done it? You know, was it one specific?
Yeah, I think that even simply getting exposed to a lot of the stories of people who had already done it was super helpful for me. I mean, that's why, you know, you could probably find 1,000 other people who told you that in the months leading up to their first real estate purchase, they listened to like 200 episodes of the Bigger Pockets podcast, yep. Or they read like 10 books on real estate investment. Mm-hmm. You know, I think even if you don't know anyone, even if you're not in a position to like join a mastermind, or you don't know any real estate investors and you're kind of shy, that's a great way to get started. Listen to podcasts, read books, just fill your brain with the stories of people who are doing this successfully. And, you know, try to make sure, I guess, that you are also listening to people who are telling you about the ups and the downs, not just telling you it's all gravy, it's all going to be easy, because it's not. There are going to be challenges and setbacks in anything that's worthwhile. And then as soon as you get enough confidence from that, go meet some humans, you know, go join a mastermind, go like even just join your like My City Real Estate Investors Facebook group. There's one for whatever city you're in, if it's got more than like 100,000 people, and, you know, you can go invite someone to coffee.
Yeah, absolutely.
Or ask questions in the group.
Love that. Yeah, I think going to RIAs or meetup groups or anything, there's all sorts of people out there doing deals in your local area. Like you said, no matter what the size your local area is, I would say any size town has some real estate investors, and they're most likely getting together somewhere. So go find those people. Those things are opening back up now. So we're sitting here June of 2021. I know all sorts of groups are getting back together now. We're hosting groups. I'm going to groups. It's happening again. Conferences are happening. Go to conferences. Conferences are great. You know, a lot of people shy away from a paid mastermind at first, but masterminds can be great. You know, really just the networking in masterminds is amazing. So look at all your options, get out there, you'll meet people, do some deals, and just keep moving forward.
I mean, a mastermind's like anything else, right? You're going to get out of it what you put into it. So you're not going to sign up for a mastermind and then get a bunch of benefit just by osmosis by being a member of the group. But if you're spending time talking to people in the group and asking for advice, then you're probably going to get some benefit.
Yeah, that's a mastermind. You're surrounding yourself with other people and pushing out into it and getting it back. You know, so we talked about how you're investing in Austin. What's your best advice for people who are looking to invest in Austin right now?
Hey guys, this is Jordan Moorhead here, and I wanted to ask if you could do a huge favor for me. If you could go leave a review for this podcast wherever you're listening to it, that would really help me get this into the hands of other people that are interested in information about Austin real estate investing, and I'd be able to help more people. Thanks, guys.
Get a time machine? That's a really good question. You know, so to be honest with you, I'm not, at this particular point in time, I have not been actively looking for more real estate investments here or elsewhere, which is not to say that I will not be again in the, you know, short to medium term future. I've been spending more time looking at opportunities about businesses versus real estate. I'm not sure what advice I have for people looking to invest in Austin in particular. It's a crazy hot market, obviously. I mean, prices are going up all over the country, but I think they're going up faster here than almost anywhere else. I'm not sure what I would tell someone if someone said like, hey, I'm, brand new to real estate investing and, whatever, I make $50K a year and I have $20K in the bank, and like I am comfortable with my living. Well, okay, if they're willing to do a house hack, that's an obvious one, right? So like house hacking is something you've talked to a lot of people about and that I've done. If you are willing to make some kind of lifestyle sacrifice, that can be some rocket fuel on your ability to invest in real estate. If you're willing to have a bunch of roommates, or you're willing to live in in one unit in a fourplex or a duplex or whatever, and you're willing to accept that small lifestyle sacrifice for long-term benefit, then that's a pretty obvious way. Although, I mean, I think those deals are going to get snatched up for exactly that reason. So what I want to know is you as a realtor and someone who's more of a professional focus on the Austin real estate market, what advice would you offer someone in that position?
Absolutely. I mean, you basically just hit the nail on the head. I will continue to house hack you for at least a few years. I recommend that anybody who's able to, like you said, sacrifice some temporary creature comforts for long-term gain, look into house hacking. There's so many ways. There's condos, single families, duplexes to fourplexes, all different kinds of stuff. Maybe you could buy a van and put it in the backyard and live in the van. I mean, you can get a single family and build an ADU. There's single families with ADUs. I'm a huge fan of house hacking in the Austin area. I think it could still work really, really well. Like you said, they are harder to find than they may have been 2 years ago, a year ago. That doesn't mean you can't find them. I think house hacking can work in any market. So any market cycle and any geographic market. But I personally believe in house hacking quite a lot. I'm finding great house hacking for myself, great house hacks for myself and clients. So I think you can still do that right now. Like you alluded to, it's a little harder to find cash flowing investment property in Austin proper. If you get far enough away from Austin, you can start to make that work. But you really just have to look at the market and say, hey, what works, what doesn't, what can I do here? And absolutely, I think house hacking is a big one you can do in any market. So I love that.
Were you, to sort of switch gears a little bit, were you, active investing or in the real estate market in 2008?
No, I was in college in 2008. So I was not. I'm 32. So yeah, no.
Yeah, I'm only a couple years older than you, but I was not financially savvy in 2008, didn't have any money, wasn't paying any attention.
Yeah.
So I guess what I'm wondering is, how would we know, if we're in another bubble, how do we know? What would the signs be? Or if we're not, then how would we know? What would the signs be?
I wish I knew the answer to that question. I know that I don't know. I know that if I continue to buy assets that break even or cash flow positive, that I don't have to worry about it so much. Because I know people who bought houses in 4, 5, and 6 in the last cycle. And yeah, the prices were going up, and up, but they were able to hold them through the downturn because they were cash flow positive. So I think for me, I know I don't know, and I just do that to be sure.
Fair enough. Yeah, and you heard a lot of stories about people being underwater on their mortgages and how terrible that was. But the thing is, most of those people, if they could wait it out for a few years, they would no longer be underwater.
Oh yeah, yep.
So sometimes the answer to a problem is to wait, just wait.
Yeah. It's hard to do. I mean, I've had shifts in assets that I've been holding, and it's hard to hold on to an asset when you see the value drop considerably. I have not held real estate during any sort of shift like that, but I've had stocks and crypto and other things where the values drop considerably while I've been holding it, and every inch of your body screams, just get rid of it. It's a loser. Dump it. Don't have anything to do with it. Be done. It doesn't matter. You'll be better off just selling it now before it drops more. And it's easy to see why you would think that when everything else is just burning around you, that I need to dump this thing while I can. But just like you said, if you have real estate and it makes sense to hold on to it, just keep holding it and you'll get back to where you were, or higher in the future. So real estate has never gone down so much that it hasn't been up above that in 10 or 15 years later.
Mm-hmm.
So I think it's smart, just hold on to it. If something bad happens, make sure you've got good long-term debt. If you have a 30-year fixed rate mortgage, you really don't have anything to worry about.
And what you're describing is, in my mind, a lot of the reason why most people who have a little bit of wealth don't manage it themselves. They'll have, a financial advisor they pay 1% a year to, or whatever. I think what separates them from people who are comfortable owning their own financial decisions is that sort of like emotional fortitude, almost, that ability to, take a look at your investments one day and feel that drop in the pit of your stomach, like, oh, it's losing money, like, the little panicky, butterfly feeling, be able to experience that and still stay the course and not make panicky decisions.
Yeah, no, it's easy. It's not easy to not let your emotions get in the way. So absolutely easier if somebody else is helping you out with it. So we've talked about all sorts of stuff. Do you have a favorite business or mindset book that you like to recommend to people? Obviously, you read a lot of books getting started in real estate investing. Was there one that stuck out?
So the book that just came to mind isn't a real estate specific book, but you mentioned business. The book that came to mind was the E-Myth, or at least the E-Myth Revisited was the version I read. So I'm at this point, I'm looking for my first business acquisition. I haven't owned or run a business in the past, but that's one that I'll reread, and that I feel like I've learned a lot from, even if I haven't been able to put it into practice yet. Is the E-Myth, which for anyone who hasn't read it, is all about how to go from working in a business to working on a business, and how like the skill set that makes someone a great baker isn't the same thing that makes someone a great bakery manager. And I think, a lot of that also applies to real estate investing. The most successful real estate investors that I know, way more successful than me, they're not spending a lot of time finagling contractors. Usually they're certainly not spending a lot of time changing locks, changing light bulbs, fixing toilets. In many cases, they're not in some cases they're self-managing. In many cases, they're not. But I think what they have in common, really successful people in any endeavor, is they found a way to systematize it.
Yeah, I love that. And the E-Myth is an interesting book. It's actually a series too, where they have, it's like the Miracle Morning, where they have the E-Myth for X business. So I have one E-Myth for real estate brokerage, and E-Myth for property management company, stuff like that. So you can even dive in a little bit more narrow to what you're trying to do. But I think everybody should just read the regular old E-Myth. I say I have those books. I have not read them. I need to read them. So that actually throws up a flag in my head that I need to pull one of those off the shelf and get to reading it, because both of those are things that I'm looking to do here in the near future. So I love the E-Myth. I think that's a great book. Nobody's mentioned that yet, actually.
Both of those you're looking to do in terms of a real estate brokerage and what else?
I'm brokerage team. I'm growing a team. So I think the brokerage fits in real well with that. I'm going to be starting a property management company here in Austin later on this year. And I've managed a lot of my own property, but I've never done it for other people. So I think that book would be a great one for me to read.
Right. So if you are managing your own properties, then probably the way to leverage that for your own success would be to not just be focused on managing your own properties, like they're your babies and each one is like a special bespoke thing, but sort of, figuring that out as a system that you can write down and train someone else to do pretty easily, and have other people manage a bunch of other people's properties for you.
And mine. They can manage.
And yours. Right.
Yeah, I love that. So Gabe, real quick, I know you've talked about it a couple times here in the show. You were looking to buy a small business in Austin. Do you have any criteria there? Size business, type of business, anything like that?
Yeah. So for the size, I'm looking at under 5 million in revenue, because that puts you under the size where you're going to have, like larger firms competing with you.
Yeah.
It's very likely, but it's probably going to be over, let's say, 500,000 to 1 million in revenue, because I want it to be large enough that it's got some momentum. It has some employees, very likely. It's very likely going to be a service-based business. So, that could be any one of a number of things. Professional services encompasses a lot of things. It could be anything from landscaping to plumbing to, doing people's tax returns. That's not to say that I would never buy, a business that was a storefront or even a restaurant or manufacturing, but more likely to buy a professional services kind of business. Yeah.
Love it. Yeah, no, I'll certainly keep an eye out, and I'm sure everybody listening to this will also keep an eye out for you. If they do find a business you may be interested in, or they just want to reach out to you, how can people get a hold of you?
By all means. So I'm not super active on social media, but I am on there. So you can find me on Facebook. If you just search Gabe Radovsky. I think I have like a distant relative with a very similar name in the Czech Republic, but there's only one in America, I'm pretty sure, which is me. You can email me at gabriel.radovsky@gmail.com, but maybe the easiest way to find me online is to search for my name on Facebook.
Okay. Yeah, and you're not in the Czech Republic, so just make a note of that, guys.
Right.
Gabe in the U.S., not Gabe in the Czech Republic.
Right.
All right, Gabe, last question here. Most important question we ask. What is your favorite restaurant in Austin?
There's too many, I think, to name one, but I'll say I'll do one more casual and one kind of more upscale. For upscale, I would say the best one I've been to here so far is Uchi.
Mm-hmm.
I mean, I know there's others, but I'm surprised by the quality of like the high-end Japanese food in Austin. Actually, it's not what I expected, but there's a lot of great Japanese food here. And for more on the casual side, I mean, there's too much great barbecue here to name, but I think Valentina's Tex-Mex barbecue would be my single favorite if I had to pick one that I've had so far.
It's great barbecue. It's just a little food truck too. So I've been told we had relatively good luck getting in there and getting food. I've been told that sometimes you need to order ahead or get there early to get.
Yeah, they're only doing online orders, and they're often very backed up. Like you'll order, it'll say 45 minutes. It'll take like an hour 15. Like so they're like too successful for their own good.
Yeah.
I think they're actually moving into a brick and mortar location, so maybe you'll be able to order at the counter. I don't know.
Yeah, no, that's awesome. Absolutely order ahead though.
Mm-hmm.
All right, Gabe, thank you so much for coming on here. Pleasure having you. Again, if you guys want to reach out to Gabe, just search Gabe Radovsky on Facebook, and he's in the U.S., not the Czech Republic.
And yeah, if any of you guys do know someone who's looking to sell a small business or small business owner looking to retire in the Austin area, please do let me know.
Absolutely. Keep a lookout for him. He would love to buy your small business or somebody that you know. Thank you so much.
Thanks, Jordan.
Great having you on here.
I appreciate you, man.